Welcome to Get Started Investing, a podcast where we help you learn to invest in 15 minutes or less. Each episode, we take one real-world business story and apply a key investing lesson to help you build your investor toolkit. If you're joining us for the very first time, welcome. We strongly recommend that you scroll up and start at episode 1. And while we are licensed, we are not aware of your personal circumstances. All information on this show is for education and entertainment purposes. Any advice is general advice only. But with that said, let's crack on. My name is Bryce, and as always, I'm joined by my equity buddy, Ren. How are you?
I'm good, bro. Sorry, I am a bit distracted. I have got my computer in front of me, and I'm just looking at some deals.
Yes. Unlike you. You're not the biggest retail shopper out there.
It's Christmas present season, baby.
Deals on the market?
It should be. That's what we're going to talk about today. But no, I'm actually on amazon.com.au.
Well played. Not sponsored, but yes, it is Black Friday. Well, it was Black Friday over the weekend. And that got us thinking about the relationship between how we think about sales in the world of consumables and sales on the stock market.
Yes. And so for this episode, for 15 minutes, we're going to say, if rather than buying one Tesla in 2010, you had bought one share of Tesla, today you would have $1 million.
Oh, my goodness. But
yeah, you're right. We think about retail sales and we think about stock market sales a little bit differently. And so we're going to talk about that. Let's start with the retail side of it, because it feels like maybe a month ago, we were asking, when did Halloween become such a global holiday? Mm-hmm. Well, when did Black Friday become such a global holiday?
For quite a while.
It been?
Yeah.
Because it's like, it's so American.
Yeah. Well, I mean, I feel like I've known about it for like 10 years.
Yeah.
Minimum.
Culture's pretty American.
Yeah.
You know where Black Friday came from?
No.
1960, Philadelphia. Thanksgiving on a Thursday, Army-Navy football game on a Saturday. The police would call because there were such big crowds on the Friday, they would call it Black Friday. And then the retailers, wanting to take advantage of the big crowds, started putting on sales.
Well played to the retailers.
A little bit of trivia for you.
There you go. So you're right, Ren. It is, now it's more than Black Friday. It's also Cyber Monday.
No, apparently I was reading something. There's now Cyber Week.
Well, yeah, I think it starts... It's already,
Has it started?
Yeah, big time.
There you go.
All the retailers. Iconic, 30% off. Koala mattresses, 25% off.
That's probably why our book is $19 down from $32 on Amazon.
Yes. Big discounts there. Head over amazon.com.au to get started investing for only $19. Best investment you could ever make. But yeah, Ren, look, the day after Thanksgiving has become one of America's biggest shopping holidays. And as we've just said, it is spreading around the world. It is a global shopping bonanza.
In America, according to the National Retail Federation, 155 million Americans shop on Black Friday. It's got a population of like 350 million. So...
Yeah, define shop though. How many shop just on any other day, I wonder?
You ask very insightful questions, Bryce Lesky. I do not have an answer for that. I would say not a third of the country. No, almost half the country.
Wouldn't shop on any
Well, yeah, you're right.
Day.
Like if they go and get a coffee from Starbucks.
Spending cash. Anyway, technicality. But this is what got me. The average spend for per person of those 155 million is $430.
Yeah.
That is huge.
Yeah.
That is huge.
It's Christmas present season.
It's average.
What do you mean average?
Average spend.
Oh, I thought you were saying it was
155 million people. Yeah, I was really proud of myself. 2 years ago, I did all my Christmas shopping on Black Friday, and it was good. It's like a little money hack.
Did you do it in person or online?
Online.
Yeah.
Just bang, 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 done. Saved a chunk.
Nice.
Yeah, little money hack. Anyway,
what are you going to get me this year?
You're not in our Kris Kringle roster, so unfortunately you fall out.
Really? All right. Well, but the reason that we thought this was relevant to talk about today is because Black Friday is known for its big discounts. We found some numbers on the average discount by category and price point. Electronics, less than $100, is the biggest discounted category, 29% off on average. Amazon devices, 13% off if they're under $100, 28% off if they're over $100. Home and kitchen, on average, 11% off. Clothing and shoes, 14% off. Beauty and personal care, 15% off. Toys and games, 13% off. And it just made us think people go crazy when they can get 13% off some toys and games. They'll queue up outside Walmart the night before and then run over the security guards when the doors open at 6 a.m. on Black Friday.
Sounds like you know what's going on. You done that?
No, but have you seen those videos? Yeah. But when the stock market is 13% off, people will run for the hills.
I know. Well, not only go crazy for it, but go into debt as well. That's the unfortunate part of a lot of big sales like this. But anyway, that's for another podcast.
So for today's episode, the lesson that we want to pull out of Black Friday is we want to tell you why you should think about the stock market like you think about Black Friday sales. We want to arm you with the information to know that when stocks are on sale, it's a good time to buy, just like when TVs are on sale, it's a good time to buy. Well,
yeah. Why? What's the saying? Why pay more for... No, it's not why pay more for less. That is a saying.
That is a saying.
Yeah, but it doesn't apply here. Why pay more for the same when you can pay less?
Keep this in.
Don't keep that in.
Keep it in. All right. So, I guess, TVs 11% off or whatever it was. The S&P is off 17% this year, S&P 500 in America. The ASX 200 is only 5% off. For all the doom and gloom that we've spoken about in 2022, it's only down 5%. Life's pretty good.
Yeah, life's not...
Well, I mean, stock market life.
That's why it should be diversified.
But yeah, look, even 5% down in Australia, less than 20% down in America, people have got scared. Yeah. And that needs to change. And the reason it needs to change is because the stock market has a really great track record of bouncing back and bouncing back strongly. And it should get you excited. When stocks are on sale, you should be excited. Hold that excitement because we're going to take a quick break to hear from our sponsors and then we'll give you the information. All right, Bryce. So before the break, we spoke about Black Friday and we wanted to explain why when the stock market is on sale, we should be just as excited as when the Equity Mates Get Started Investing book is on sale on Amazon. So give me the numbers. Why should we be excited when the stock market's on sale?
All right, Ren, so here are the numbers. Here is why we should be just as excited about taking the opportunity of a fall in the stock market just as much as we are at discounts on Amazon like you were at the start of this episode. So at its max, in the current downturn, the ASX has been down about a maximum of 15%. The S&P 500 has been down a maximum of 25% from its all-time high. Pretty significant discounts. But here's why we should be excited, and here are some of the numbers. So we took the S&P 500 and looked at it historically. What has happened post a 20% fall from record high? Keeping in mind that we have experienced that at this current fall. 6 months after the S&P 500 has fallen 25% or more, on average, it's bounced 4%.
Yeah.
Now, there's been a number of instances. There's probably 2, 4, 6, 8, 10, 11 times that it's fallen about 25% or more since 1950. And the good news is, Ren, 60% of those times it's fallen, you're bouncing back.
Within 6 months?
Within 6 months.
So 6 months after it's fallen 20%, you're in positive territory.
You're back
You've
in
made
business.
money. Yeah.
You're back in business.
Yeah.
But that's not the most exciting part, Ren. If we then look at what has happened a year after, if we took advantage of those discounts and we got into the market, a year later, you're up 15% on average, and 70% of the time you're up. You're green. You're in the positive.
Yeah.
How good are those odds?
We should be clear, you're in the positive from when you bought.
From when you bought.
Yeah. It doesn't keep collapsing.
No. Yeah. But then it gets even better.
Hold on. Let's pause it 1 year because you're right. I think there's 10 instances here going back from 1957 all the way up to the COVID crash of March 2020. So a statistically meaningful data set.
Yeah.
In that range, after 1 year later, 1973 and 2008, you had a tough time. You were down 27% further in 1973. So it fell 20%, then it fell another 27%. In 2008, it fell 20% and it fell another 29%. So they're the times where you're like, I'm not going to get excited about this. This isn't a good discount. But and one other time in 2001, you fell 1% further. So those were the 3 times that you fell. Every other time, the market rebounded, and every other time, 1 year later, it was up double digits from there.
Yeah. 2020, if you'd taken advantage of the discount and bought, a year later, you're up 59%.
Yeah, it goes from 11% in 1970 to what's next? 25% in 66, 26% in 62. Oh, there's 23% in 87, but yeah, 59% in 2020. So I guess like that's a lot of numbers to listen to on a podcast, but the point in those numbers is when stocks are on sale, historically, this is based on the US market, it rebounds aggressively.
Yeah, aggressively, and it keeps going. Let's zoom out even further and take a look at what has happened after 3 years. So let's just say where we are now, we've dropped 25%. We buy in. On average, in 3 years' time, we'd be up 29% on average. There are some whopping numbers in there as well. 82, you're up 62%. And the percentage chance of that occurring is 89%.
Yeah.
89%.
89%. You're 3 years later from when you bought, you're up.
Yeah. I mean, if these numbers don't get you excited about taking the opportunity when the market falls, having a long-term view historical view about what could happen, then I don't know what's going to get you excited.
Yeah. They don't have 2020 numbers because we're not in 2023 yet. We're not 3 years later. But of the 9 that we've got here, there's only one that is down. In 2001, 3 years after that, you would have been down 6%.
Amazing.
Everything else was positive. Even in 2008, how bad it was then, if you'd bought when the market was down 20%, just like 6 months. So you bought when it was down 20%. 6 months later, you're down another 27%. A year later, that's now 29%. So you're hurting. 2 years later, it's rebounded a little bit, but you're still down 17%. But time cures everything. Because 3 years later, if you held through that tough period, you're up 6%.
Love it. Absolutely love it. Well, Ren, it begs the question though, okay, so we've taken a tumble. I'm getting excited. I'm hearing what you're saying. I want to take advantage. But is now the time? Can this 25% discount that we're seeing, can that become a 30% discount, a 40% discount?
Yeah.
Should I wait?
Don't buy on Black Friday, buy on Cyber Monday.
Yeah.
Is the stock market going to fall further? So I just read this book by Nick Majuli. Good book. I might have butchered his surname. Just Keep Buying. There are 2 stats from that book that I wrote down and I think really illustrate why it doesn't make sense to wait. So this was interesting. Between 1930 and 2020, if you randomly picked a day, there's a 95% chance that the Dow would close lower at some point in the future.
Okay.
So like the point there is chances are whenever you buy, there's a 1 in 20 chance you will not buy at the bottom.
Yeah.
There will be a lower day. And sometimes that takes years. Like he was saying, there were some periods where it was like 12 years later. But that does make you think, oh, well, if the stock market's going to be lower in the future, why shouldn't I just wait until that point? But the point is, you don't know. Well, number one, no one's got perfect foresight. Yeah. No one knows when it's going to be. And number 2, the way that you invest as someone who earns an income and takes part of that income and then puts it in the stock market is that you're naturally dollar cost averaging through the ups and through the downs. And this second stat, I think, really illustrates the power of dollar cost averaging. So if you picked a random month from 1926 to today, any month, and you started buying the Dow Jones Industrial Average, which is like an index over in America, if you bought once a month, every month for a decade, the median outcome would have been 10.5% per annum returns. So just pick any month. 1929, the Great Depression, and you just bought for 10 years through the Great Depression. If you bought in the 2000s, in the lost decade of the tech wreck and then the GFC, if you bought in the end of the 80s when the market crashed in 87, like just pick any month in that period and you just consistently buy for a decade, your median result is 10.5% per annum.
Nothing wrong with that.
Oh,
you would take that for sure.
Most active professional fund managers would take that.
Yeah, absolutely.
Yeah.
Well, so I guess the moral of the story, Ren, then is don't wait, get started.
Get excited.
Get excited.
Kick the doors into
Kick
the
the
stock
doors in.
market the same way you kick the doors in of Walmart.
Yeah, so every time you log on to Amazon.com, Iconic, or whatever it may be for a Cyber Monday or a Black Friday, just think about why you're not getting as excited and refer back to this episode to get as pumped as we are about the opportunities that are presenting themselves in the market at the moment and the long-term implications of that over, as we've talked about, 1, 2, 3 years. The percentage chances
10,
of being up are
20,
amazing. 10,
30.
20, 30. But anyway, Ren, we have hit over our 15 minutes, but we should just call out as well that we are super excited and very, very proud of the Equity Mates team, because last week we were awarded the Best Business Podcast at this year's Australian Podcast Awards for our newest show, The Dive, that you have been absolutely charging ahead with Darcy and Sasha as well.
Yeah.
It is a take on business news,
If people-
3 episodes a week.
If people are watching on YouTube, you can see the award behind Bryce. He's set it up in the studio. Now he's just holding it.
There you go. How
Yeah.
good. It's real. It's real. But yes, very excited. Best Business Podcasts at the Australian Podcast Awards. If you're not already listening to The Dive, make sure you jump across and
Yeah.
give it a whirl.
Yeah.
But anyway, Ren, we'll leave it there. We'll pick it up next week.
Sounds good.